Good morning, happy Monday to you. You're tuned in to Buy Now, Sell Now on ET Now. My name is Alex Matthew and with me is Cheryl D'Souza. We'll take you through the next 1 hour. Well, as I look out of my window here in Mumbai, it's a bit of a gloomy start to the week, and in fact is, everything's rattling outside, wind is terrible. But at least for the equity markets here in India, it's a steady start to trade. Cyclone Taute notwithstanding. So we've got gains of about 0.9% for the Nifty 50 index, trading comfortably above the 14,800 mark, or rather just above that mark as of now. And quite a few stocks doing well for themselves in trade. Let's take you through some of them. In fact, you find UPL right on the top of the list, gaining about 5%, and quite a few of the banking names. That really is the story for today. Nifty Bank gaining over 2.2%, and it's really leading the gains. Auto is looking strong, up about 1.3%. Not really too much else to speak about. Realty also to a certain extent is performing 1% higher, but pharma, IT, FMCG, all looking just a tad bit lackluster, and so is the metal pack. But Cheryl is going to tell you a lot more about the individual stocks that you need to focus on. Cheryl, morning.
Good morning, Alex. And like you said, looks like gloomy Monday for us, a gloomy day for us in Mumbai. But definitely the markets are holding on, 1% higher coming in for the benchmark indices. But the stocks that are in focus, first up, I'll talk about Shilpa Medicare. That particular counter is surging in trade after a pact with Dr. Reddy for Sputnik V vaccine. They've also said that they will look to manufacture also Sputnik Light. This is as of now what Shilpa Medicare is saying. Quick Heal is another counter that is buzzing in trade on back of strong earnings. Ditto coming in for automotive axles. That particular counter also is surging on back of earnings. Oberoi Realty sees earnings reaction. Cipla as well. Escorts on the other hand is down about 3% in trade on back of the Q4 earnings. Adani Green is holding on to gains, and Colgate in focus today because it will report its Q4 earnings. And apart from Colgate, you also have Bharti Airtel that is in focus. That counter will also report its Q4 earnings. And talking about Bharti Airtel, that's the stock that's a part of our BNSS spotlight today. So let's take it across to Sunitha and figure out what are the estimates saying for Bharti Airtel for Q4. Sunitha, what are we penciling in for Bharti Airtel for the quarter gone by?
We are expecting a very mixed kind of quarter from Bharti Airtel. As far as top line is concerned, we are expecting 1.3% decline in top line, largely because this is the quarter where interconnect usage charge was dropped. So that's what will be reflected. We saw in case of Jio also, it had impacted the ARPU. Similar trend is expected in case of Bharti Airtel. We are expecting ARPUs to be lower by 14 rupees, and we are expecting ARPUs to come at 152 in this quarter versus 166 in the previous quarter. However, the margins will improve largely because Bharti was the net payer as far as IUC was concerned, and also Bharti Infratel will no longer be consolidated. That was diluting the margins. So we are expecting margins in this quarter to improve by 250 basis points. We are expecting margins to come at above 48%. And also, if you look at the kind of subscriber addition Bharti Airtel has been having, and especially the 4G customers, we are expecting data revenues to be much stronger this time. So that's what will play out in the numbers. But going forward, what will move the stock is largely if there is further consolidation in the industry or if there is a tariff hike. Most of the analysts are now working with the assumption that tariff hike will only be happening in the second half of the fiscal. So what we'll have to wait and watch what the management commentary is on the front. Other than that, we'll also watch out the management commentary on digital assets as well as what the capex is likely to be in fiscal 2020.
All right, thanks Sunitha for setting the context for this conversation. It's certainly going to be a stock to watch out for in trade today. Let's go across to our guests then. Kunal Bothra is joining us, and we've also got Ashish Maheshwari, who's director at Blue Ocean Strategic Advisors. Good morning to the both of you, and thank you so much for taking the time. I want to start with you first, Kunal. What are you looking at in terms of trends for Bharti Airtel, and how does it compare with its peers? And when I say that, I'm primarily talking about Reliance Industries, though it's not necessarily a like-to-like comparison.
Everyone, absolutely. So it's not a like-to-like comparison as such. But Bharti Airtel has been one stock where there has been too much of anticipation but somehow the participation levels have dropped for the stock in the last few months, and the charts themselves try and indicate that. So what I've highlighted is one very important indicator on the charts for Bharti Airtel, using RSI as one of the mean indicators to try and understand that what are the trends pursuing for Bharti Airtel. So you look at the charts on the top grid, which is the black line, is the prices for Bharti Airtel. On the lower grid, in the red line is the RSI. So you can look at the band for RSI and the shaded region, that how the RSI has been in a consolidation mode, and that has resulted into the price also going into a strong consolidation as such. Now, this consolidation would probably get over either if there is two kind of breakouts. One of them is a price breakout, that whether the stock crosses back about that 600, 606 mark, that could lead to a very strong uptick on Bharti Airtel. Or the precursor of that could probably happen if the RSI gives a leading breakout, which means the RSI gives a first-hand breakout, of this consolidation pattern. So I think whichever comes first should be taken cognizance of, and both of these breakouts could be potentially trend-changing breakouts for Bharti Airtel. So I think this is one stock to be kept a watch upon. I'm not sure whether the results, how the stock would react post the results, but if it manages to cross and sustain about that 600, 605 mark, I think this could be a time of a strong turnaround for Bharti Airtel as well.
All right, Kunal, thank you for that. That is Bharti Airtel's chart that Kunal is explaining that the stock currently looks to be in the consolidation zone. Ashish, good morning. Cheryl joining in. Wanted to know your views on Bharti Airtel. What are you expecting this time around with the Q4 earnings? Definitely we will see the ARPU's decline. That's what the poll is indicating. We also saw Reliance Jio's ARPU decline in Q4. But what are you penciling in for Bharti Airtel's earnings?
I also think that ARPU fall will be something which Street may not like for Bharti also. Though the number of new subscriber addition is positive as far as Bharti is concerned, but in my view, I'm expecting slightly weaker quarter compared to what Q3 was there. So we have already seen a big rally once their Q3 numbers came out, but this time I'm not expecting same momentum will continue. Though if I see year over year, last year in March they reported a big loss, so this time decent profit is going to be there. But in my view, all those numbers are already priced in, and we may see slightly lower EBITDA margin also in this particular quarter. So this is my take on Bharti.
Ashish, if you can hear, Ashish, if you can hear me, I just want to come in on that. One of the factors that a lot of people are looking at as far as these telecom companies are concerned is the ARPU number, right? And that all boils down to pricing power. What are you looking for in terms of guidance and in terms of outlook from the company? They have said that ultimately the ARPU has to go up, but what is your anticipation as to how quickly they can raise it? Pricing pressure will always be there, considering that we're looking at this now as a duopoly between Reliance Jio and Bharti Airtel.
I think if we see the last monthly numbers or even Vodafone Idea, they have also reported addition in their subscribers. So everything is not lost as far as Vodafone Idea is concerned. They are also doing well, and they will keep on giving pressure for pricing as far as Airtel and Jio is concerned. Anyway, Jio is the leader here, and there also we are witnessing some amount of ARPU pressures are there. So primarily these subscribers which are working on prepaid model per se are going to reduce their subscription. And if we have seen latest announcement by Jio where they are giving 300 minutes talk time, etc. So the reason is people are not renewing their subscription for the month because a lot of places lockdown is there and people are not having still that online facility, etc. in tier C towns as well as in villages, etc. So my view is this particular quarter is again going to be subdued for telecom companies. That is why none of these stocks are in my buying list.
All right, so none of these stocks in the buy list. You expect to see some pressure coming in on the telecom space. But as a viewer, if someone is trying to look at the telecom space at this point in time, how are the charts actually looking for the entire telecom space? Does it make sense to enter at this point in time if there is a drop on earnings front, Kunal?
There are two important points. It's a very valid question, but there are two important points where we look at charts and try and assess. So whether the stocks are placed at the lower end of the curve in terms of their chart patterns, that's in terms of support levels, or whether they're heading into an event or an event like a result as well, very close to their resistances. Now for Bharti Airtel and for Reliance Industries, the two specific names from the telecom stocks, I think both these stocks have shown completely different kind of chart patterns. Bharti Airtel on one hand is nearing the breakout the 600 mark. So yes, it's off by 5%, 6% from those levels, but then it's still at the upper end of the trading range. For Reliance Industries, on the other hand, the stock is closer to its support of 1850, 1900 zone. So I think that stock is looking a bit, I would say, shallow in terms of trend, because you've seen the stock lying low at this 1900 mark for quite some time. So both these stocks are showing completely different patterns. Now, if the time frame is long term, what we have to assess that whether on the longer term charts, whether these stocks have the ability to try and withstand the corrective phases and still give a strong trend reversal on the upside. So yes, these stocks, both these stocks, Bharti Airtel as well as Reliance Industries, they've managed to withstand a lot of the corrections. And somehow it's just a matter of time that these stocks have restarted a strong uptrend for themselves. So from a longer term play, I think both these stocks are attractive buys, specifically Bharti Airtel and Reliance Industries, and I sense that it's just a matter of time that when these stocks would break past about their resistances. So for someone who's looking at it from a longer term view, 1 year plus kind of a time horizon, I would advise both Bharti Airtel as well as Reliance Industries as strong buy signals from current levels.
Point taken. Thank you, Kunal, for that. Kunal's view coming in that Reliance Industries as well as Airtel both look as attractive buys over the longer term. All right, on that note, we slip into a break on this edition of Buy Now, Sell Now. But stay tuned. Once we come back from the break, we'll get you the high-risk, low-risk ideas of our experts and also address your queries. So don't go anywhere.
All right, welcome back. You're watching Buy Now, Sell Now. It's time to take our viewers through the high-risk and low-risk ideas from our experts. I'm going to come to you first, Kunal. And just a reminder to the both of you, if we can keep the answers a little short, because we have to launch straight into the query segment. Kunal, what are your ideas for us today?
Two buy calls, Alex. First one which I'm suggesting is a buy on Muthoot Finance. I'm sensing many of the gold finance stocks to make a very strong comeback. So suggesting a buy on Muthoot Finance for a target of 1280, 1300 levels. Stop loss to be kept at 1170 mark. And the second one which I'm suggesting is a buy on UBL. That's United Breweries. After quite some time, the stock is making a bullish pennant breakout. So would suggest a buy for a target of approximately 1300 and stop loss could be kept at 1200 mark.
Ashish, what are your high-risk, low-risk ideas for viewers?
My high-risk idea and high-return idea which can give good return is HFCL. Though I'm not like telecom sector, but I like companies which are providing support to telecom sector. So this is a company which came out with excellent set of numbers for March quarter, and I'm expecting same run rate to continue. Just imagine previous March they reported net profit of 6 crore, and this was around 86 crore for the last quarter. And I'm expecting same run rate to continue. So if I see the valuation wise, the stock is just available at 13 price earning multiple from FY23 earnings, which is quite attractive in my view. And defense, 5G and broadband will continue momentum for this particular stock. So a must add in the portfolio. Another low risk, low return idea which I like is JBM Auto. This is a company again which is available at very low price earning multiple, and they are primarily into auto ancillary and moved into the EV buses also, and where they are getting very good response. They are having almost 700 buses which cost almost 1 crore per bus to be executed in next 1 year. And I'm expecting this company from turnover 2,000 crore in next 3 years can even touch 5,000 crore kind of turnover, the way momentum is there in each segment. Company is going to come out with very good results also for Q4 tomorrow. So I'm expecting the run-up will continue in this particular stock. And my target for the JBM Auto for next 3 months is 600 rupees.
All right, on that note, let's launch straight into the query segment. Quite a few of you are tuned in live on social media and you've already posted your questions. I do encourage those of you who have not put their names in their handles to tell us what your names are and what your duration is, the query that you're asking. I'm going to start with a mail query though. This one is come in a couple of times. Sagar is asking a question about Varun Beverages, and I'm going to take it across to Ashish. Ashish, for a fundamental view, would you recommend a buy for Varun Beverages, and very quick rationale as to why?
Yes, if I see fundamentally, company is quite strong. Last quarterly numbers were pretty good also. But only one hitch is there that because of the COVID and COVID factor, there's lockdown in various cities and states. So the demand for beverages particularly has come down, per se, for their main customers like Pepsi and Coke, etc. So some slowdown is expected in their earning also. But in my view, at 950 rupees, this will be a good price to enter in Varun Beverage for long run, because again, companies fundamentally very sound, long-term contracts and everything is there. So, and stock has also corrected by almost 200 rupees from 50 week high. So 950 will be good entry point.
All right. Moving on to our YouTube query, and this one is coming in from Nino Kurvilla, saying that can you suggest the short-term target for Quick Heal, and is it prudent to enter this particular counter at current levels? Kunal, how is the counter of Quick Heal looking like? Also, given that it is reacting to earnings, so you're seeing the sharp uptick, so does it make sense to enter at this level now?
Well, I think it's difficult because I think this is a big gap up for Quick Heal. The stock has not seen this kind of a gap up, at least in the last 10-12 months. So it would be prudent enough to wait for at least a couple of days and then probably sense that whether this is just a gap up or a one-day reaction specifically for the earnings, or whether this is a gap up which should sustain and probably take the stock higher to a new range altogether. If that's the case, if the second part plays out where you see the stock gradually moving up higher and there are no phases of correction, then I sense that buying the stock even at for example currently it's at 210 levels, so even if it's at 220 levels, it could be an attractive buy even if the stock moves up higher, because then it would indicate that it's moving to a new range altogether. And then from a short-term basis, I would suggest that keep a target range closer to 245 to 250 range on Quick Heal.
Okay, let's also pull up the charts for NTPC and look how they've done over the past month or so. It's actually done reasonably well, and this is, Kunal, in the context of a market that has not been trading on very, very firm footing, right? We've got a question coming in on YouTube on NTPC. This one is from Danny Verghese. He's bought at levels of 98 and he's looking for a short-term period. He's in the green right now. Should he keep holding?
You should hold. I think I would advise that the viewer should hold on to the PSU breakouts. It's been a very strong breakout for many of the PSU stocks, and they have these odd tendencies that whenever they rise up in momentum, the momentum is very fast. Traders tend to catch on to the momentum at the upper end of the range, and then these stocks go through a bit of a pause. So I think it's now going through a bit of a pause period. If you're in from I would say short term to slightly medium term, say for another 2 or 3 months, then I would sense that NTPC and such other stocks from the PSU pack, they would probably see one more rally on the upside, and that rally could take the stocks higher by another 10 to 15%, at least on a moderate basis. So I would suggest a hold on NTPC, and if you've bought at lower levels, I think that's a good enough buffer that you've built in to hold on to your stocks specifically on this name.
Our next query is coming in from Joby Sebastian, saying that he's holding on to L&T Finance, which he bought at 70 rupees per share level since the last 7 years. Please suggest whether he should hold or shift to another stock. Ashish, what's your view coming on L&T Finance? Joby has bought this counter at 70 rupees and he's holding it for the last 7 years. So what should he do? Should he continue to hold on to this particular counter or shift to another counter?
If you want to remain in the same segment, then I'll advise to exit, because this is a laggard. If you talk about the performance in last even 7 years, you see other stocks where they have reached an NBFC, but this is a stock which has not moved because share the way of working, that is, they are more into infra funding, and their other businesses are also having some pressure. So the kind of results which is expected out of NBFC is not forthcoming. So my suggestion will be to exit from this stock. I'll suggest two alternatives. If you want to remain in same segment, then EV Capital hold good potential. Otherwise, if you want to remain in same price segment, then I'll also suggest Subex Systems is a good company to invest at this price.
All right, interesting. Let's look at a small cap company, and I'm hoping, Kunal, that you have a view on this. This is Bharat Bijli, and it's currently trading at just under 1,300, market cap of about 750 crore rupees. We've got a question coming in from Sagar. He bought at levels of 950. So he's making quite a bit of money on this trade. He's wondering whether he should hold for further upside potentially, or should he book profits at this point?
It's a short-term trading call which the viewer has taken. Then I think it's a good enough profit that you're making of approximately 30%, 33% on your holdings. For Bharat Bijli, that's BBL on the NSE code. So I think in that kind of a time frame and context, you can book out profits. But then look at it this way: that if you're looking to build something from a long term and trying to invest in few of the large cap PSU names and then hold on to it from long term, hoping that many of these stocks could probably give stronger returns, then I think in that aspect you should shift on to some other large cap names on the PSU side. So something like maybe an ONGC, a Bharat Electronics, BEL, even a BHEL, that's Bharat Heavy Electrical. I think these stocks, they look fairly attractive to me on the longer term prospects. So it depends on the kind of time frame and the kind of trading mentality which the viewer has. If it's specifically too short term, then I would suggest booking profits over here and then shifting on to some other quality large cap names on the PSU side.
Next query is coming in from Sherry. Wants suggestions on buying Dr. Reddy's June 5500 call. Kunal, what's your suggestion on that?
500 call would be a bit of a stretch for Dr. Reddy. That's what I would believe. I would sense that the stock is going through a correction consolidation mode. Indicators are coming back into bearish. I would not say bearish, but a bit of a reversal territory for Dr. Reddy. And you've seen multiple tops for the stock around this 5,500 mark. So ideally, as a trade, you have to wait for a breakout. That the stock breaks out of that 5,400 mark. Only then you can probably buy at the money call option, because then time value would be of most critical importance to you, specifically if you're buying the option trade. So I would suggest that look at this trade as a possibility only if the stock breaks past about that 5,400, 5,450 zone, because that could lead to a triple top breakout for Dr. Reddy.
Okay. I'm going to come across to you, Ashish, on this next one. We've got Anup Kumar, who's bought Ircon International, and he's bought it in anticipation of the corporate announcement following up with regard to the bonus issue 1:1. On the fundamentals, though, should he continue holding the stock?
Yes, I think you can continue to remain invested. It's a pretty good company. Stock is having good momentum also. So my suggestion will be to remain invested here, and you will get good returns over a period of time. So remain there.
All right, our next query is coming in from Valan from UAE, saying that he has 600 shares of Z that he's bought at 205 rupees per share. He wants to know whether he should hold, switch or add on to this particular counter. Kunal, what's your view coming in on Z? 600 shares at 205 rupees per share.
Because the stock is marred with so much of news flow, which comes every now and then and probably disturbs the trend for the stock. So I think even 3-4 months back, the stock had gone through a very similar fate when I think just about pre-result, the stock had come back to 250, 255 levels, where it seemed to be more of a strong candidate of breakout. And then post-result, we saw the stock falling down once again and coming back to that sub 200 level. So it's a stock which is marred with a lot of these news flows as such. So it becomes very difficult to try and give a stronger view on the upside. But then I think if you're looking at some contrarian or some other alternative from the media stock, then I would recommend something like Sun TV. I think the stock has changed its characteristic. It's now become more of a buy on dips candidate. 500 seems to be a good enough support level for Sun TV, where it has tested almost this level 2 or 3 times in the past 1 month, and the stock has managed to bounce back. So I would suggest a better alternative that if you can shift from Z, which could be a bit of a high beta stock, to something of a low beta to moderate beta stock like Sun TV, I think it could be a prudent shift from that sector.
All right, we've got a question for you, Ashish, on fundamentals. We've got Padma, who has 50 shares of Alkylamine, bought at levels of 2,400. She mentions post-bonus. And this is a stock that is under pressure in today's trade, down about 4.5% or so, but it is significantly above her buy price. Would you advise her to continue holding, and what's your view on the fundamentals?
The issue is, from 700, the stock has seen a run up of almost 3,900, all within a period of 1 year. So this is the time where people are taking money off the table in chemicals or in metals, etc., and looking for newer segment because valuations are quite rich. So my suggestion will be again to exit from the stock. Though fundamentally nothing wrong with the company, but as there's a vertical rise in these stocks, so some correction is warranted, and I also advise to exit from alkylamine at this point of time.
Our next query is coming in from Santi on Amara Raja battery, saying that the stock is continuously falling from this highs that is hit in February. Wants to also know that what is the reason for such high bearishness on the stock. Wants to know what sort of level can he or she look at to enter over the longer term, as this particular counter is likely to get benefited from the EV play as well as the PLI scheme. So Ashish, how is Amara Raja looking like? Do you have any target in mind that you can look at to enter this particular counter for the longer term?
Yes, I think now the fundamentals are changing. Government is also giving a lot of emphasis on battery segment, battery storage, etc. Some PLI of 60,000 crore was announced. So some momentum is again going to come in all the battery days. Only the issue was that earlier the stock has moved up quite a bit from almost 600 rupees to 1,000 rupees. So some profit taking again happening. But as far as fundamentals are concerned, there is no concern as such. Company is coming out quarter over quarter, good set of numbers, and my suggestion will be to start accumulating Amara Raja at this point of time. We will again see 900, 950 kind of price maybe in next 3 to 4 months.
Okay, we've got a question on options, and this one is from Ritesh Garg. Kunal, for you, bought Adani Port May 800 call at a 37.8 strike. What would you recommend that he should do? Should he exit at this juncture?
You can hold on to your investments over here on Adani Ports. 800 is not a very far or deep out of the money option for the stock, and it's been largely in this range of 740, 730 on the downside and closer to 800 on the upside. I would sense that the market goes into a resurrective mode like what you're seeing today. Even for the next couple of days, large cap names like Adani Ports could probably potentially see a breakout. So I'm not sure of the exact current market price for the 800 strike option, but I think if you've been holding on since last 2-3 days, then I'm sensing that it's very, very close to your cost price itself. I would suggest a hold. Wait for the next couple of days. If the market gets back into traction, then I believe Adani Ports should break past about that 800 level.
All right. Coming once more to you on this particular counter, Kunal, and this is Sandhya Rao talking about Sun TV. She's holding this stock since the IPO time, bought 40 shares at 220 rupees per share. Wants to know what's the short-term view coming in for Sun TV.
As I was mentioning earlier on the Z query, that Sun TV is one of the stocks which I think looks fairly attractive from the media stock. It's been more balanced, more stable, less volatile, and somehow closer to this 500 mark, plus or minus 10-12 rupees odd. You tend to see a lot of support building on for Sun TV. So I would sense that 500 should be a good level for you to keep on averaging, or average if your buy price is on the higher side. I would place a short-term target of at least a 560 to 580 levels for Sun TV, and given that, I would suggest a time frame of at least another 3 to 4 weeks.
Coming back to you in this next one, Kunal, we've got Rajan Vittal who's asking about insurance space. I believe we had spoken about this last week or the week before that. He's got two counters that he's considering though, SBI Life and ICICI Pru, and he's looking at a 6 to 12 month time frame. Which one should he pick?
Frankly, Alex, because both of these stocks, they look fairly attractive. In fact, we had done this analysis as well on the top three names from the insurance pack, that how HDFC Life, SBI Life, and ICICI Pru have fared over the last 12 months particularly. I see that probably both these stocks, SBI Life and ICICI Pru, have just recently given a strong breakout on the upside, and they've managed to outperform HDFC Life over the very near term. So I think just purely on the basis of the short-term momentum and a surge of momentum into these names, I would suggest that you can probably look at SBI Life as one of the potential breakout candidates. And if you're looking at some of the other stocks from the insurance, then I think even an ICICI Lombard, just a shade below that 1500 mark, I think also could be an attractive short-term buy.
The next query coming in from Tony Anthony talking about Radico Khaitan. How does this counter look over the longer term? He's holding this Radico Khaitan, which he bought at 500 rupees per share. Ashish, how is Radico Khaitan looking like? This particular stock saw a sharp run over the last, I believe, 3 to 4 months. So how is this counter looking like over the longer term?
Yeah, fundamentally very good still, and consistently they are reporting profit of 70 crore rupees quarter, and very low on debt also. Like in consumption space, a good play asset, but only thing is because of again this lockdown, the availability of liquor is also a challenge pan-India basis. So we may see some sort of pressure in top line in this particular quarter, and this is the reason the stock is also witnessing some amount of selling pressure. But if you are having long-term horizon, you can continue to remain invested. For next 1 year, my target for the stock is around 650.
Okay, Kunal, I'm just going to take a chance with this counter, and I'm not really sure if you're going to have a view. It is seeming to be quite a volatile counter. Sport King India is the name of the counter, and the viewer has bought into the counter and is wondering whether to hold on. Do you have a view first of all, and would you be able to give us something that we can use?
Really, Alex, I don't track the stock. I think it's BSE listed as far as I can sense from the holdings, but I don't track the stock that often.
I'm going to go across, Ashish, to you. And this one's from Tony Anthony. He's got Radico Khaitan for the long term, bought at levels of 500. Would you recommend a hold on that?
I just gave my view.
Sorry about that. Let me then come across to you for Cipla. Earnings just came out. Sudarshan's got a question on this. Bought at levels of 660 for the long term. Should you hold or book profit?
So my session will book profit. in my view, again, wherever results are not in line with the market expectation, some profit taking expected, and which is happening in Cipla also. So you are sitting on decent profit. My suggestion will be to book gains in Cipla one.
All right. Our next query is coming from a YouTube handle name VPJ25. Next time, would request you to write your name as well. He's saying that he's bought Westlife Development 200 shares at 500 rupees per share. He wants to know whether it's worth holding on to this counter or should he take a stop loss and exit. Also, he does not mind holding the stock for the longer term. So what's your view on Westlife Development, Kunal?
It's a good stock to hold on. It went through a rough patch, I think, in the month of March or end of February and start of March, where it corrected from 500, 520 levels to 400. But I sense somehow that the correction seems to have gotten over. Few of the indicators which I look at, like MACD, for example, has come back into positive territory, which means that it's just a matter of time that the stock will probably end this consolidation and then head towards a trending move on the upside. So if you bought at higher levels, I would suggest that look at 420 as a good averaging point for Westlife and hold on to it from at least a medium term to longer term view. I would sense 500 to 520 as a potential target over the next 9 months to 12 months.
Okay, Senthil Jaikumar has got a question on Adani Total Gas. Ashish, coming to you for this one. He says he's got a long-term view, but he says it's for 1 year. So it's a bit of a contradiction there. But would you say that the counter is something that you should consider?
It's the kind of run-up we have seen in Adani Total Gas. The kind of returns this stock has given is huge. I think this is one of the best performer stocks in last year in that market cap segment. But again, the potential is there, number one, because still India is opening up and pipe gas is not available in every home of India. So till the time this pipe gas will reach to every home, then there's a consistent revenue model because every month you will keep on getting billing. So this is the reason we have seen good interest from the investor fraternity to accumulate this stock, and now Total is also shareholder. So this is a stock which you can even hold for 1 to 3 years. You are going to get very good return with a very limited floating stock in the market. In my view, this will continue to do well coming time.
Right, our next query is coming from Krishna Kumar from Chennai. He wants to know about ITC. How is this particular counter looking like? He has 360 shares that he's purchased at 221 rupees per share. He is a long-term investor, so he just wants to know how does ITC actually look over the longer term. Needs some clarity on that particular front, Ashish.
ITC is a stock where I think most of the retail traders always get stuck up in whenever they buy this stock and doesn't move. So my suggestion will be not to chase ITC per se because we don't know when this stock will start again its bull run or when it will cross its 52-week high or 240 once again. So my suggestion will be to look at more other FMCG play like Marico, which came out with a flying set of numbers. At the same time, even I like HUL also in this space. So ITC is a avoid front my.
All right. On that note, I'd like to thank both our experts, Kunal as well as Ashish, for taking the time for answering the questions that you did answer. To everyone who's tuned in live on social media, if you've not got your query answered today, we'll be back tomorrow at 11:15 and you can get your query answered at that time. We're slipping into a short break, but more on the other side, so do stay tuned. Welcome back. You're watching Buy Now, Sell Now. Now, it helps to sometimes, as a retail investor, look at what institutions are buying, what large investors are buying, because then you understand the moves that are taking place in individual stocks. Jayesh Khilnani has got the ET Now Insight, that is to tell you what SBI Mutual Fund bought and sold in the month of April. Here it is.
India's largest mutual fund, that is SBI Mutual Fund, now has equity assets of 2.7 lakh crores, where the top sector exposure stands towards the real estate as well as the utility space. In the previous month, they made huge amounts of buys in the IT as well as the real estate space, while they sold off considerably from the energy as well as the consumer staple space. As far as the top 5 stock purchases are concerned, you had Power Grid featuring in this list. 1.47 crore shares what they added, and the stock managed to climb 2% in the previous month. You had a lot of small and mid cap names featuring in the top 5, where you had Hindustan Copper, BEL as well as VOB, where they picked up about 60 to 75 lakh shares, and the stocks also managed to climb considerably except for Bank of Baroda. From the large cap space, they added Hindalco, more than 50 lakh shares, and the stock managed to climb more than 11% in the previous month. Where they sold off considerably was BPCL, 51 lakh shares that they reduced from their kitty, and the stock declined 1%, while you had Chola Investment and JSW Energy, where they sold off more than 40 lakh shares, and the stocks managed to climb as well in the previous month. Lastly, you had Exide as well as SAIL, where they reduced their stake by 20 to 25 lakh shares. However, Steel Authority was the exceptional outperformer with more than 50% gains in the previous month itself.
Thank you, Jayesh, for that. And with the stock market showing resilience despite the surge in the COVID-19 cases, around 10 companies have actually filed IPO prospectus with SEBI in the first half of May to collectively raise nearly 20,000 crore rupees. So the companies include Go Air. They've sought nod for a $490 million IPO. You have Penna Cements that sought a SEBI nod to raise up to 1,550 crore rupees via IPO. You have Vinlas Biotech also filing for seeking SEBI's nod for IPO. You have Devyani International that's filed DRHP with SEBI to raise about 400 crores rupees via IPO. You have Aptus Value Housing Finance as well as Supriya Life Sciences, Car Trade Tech, all of them filing for IPO, filing for SEBI's approval for their IPO. So definitely, along with the stock market showing resilience, you can see the IPO rush resume, and collectively they're looking to raise about 20,000 crore rupees. Around 10 IPOs, 10 companies have sought for SEBI approval for IPO. And moving on, Zensar will be acquiring share capital of M3B for $33 billion. The stock has been bucking the trend on back of this acquisition, and I stand corrected, it is $33 million. We spoke to the CFO of Zensar Tech to understand more about the deal that has been sealed. Listen in.
Actually, this M3BI has been a company which has working in digital engineering, data engineering, analytics space. This is clearly one of the strategic growth opportunities that Zensar has identified. They also come with a very good marquee client base of 3 Fortune 500 companies amongst them, which we believe will help us create more revenues by mining into these customers, as well as we will be able to take these skill sets into other Zensar clients. So all in all, we are looking at it that this would create significant business potential for Zensar, as well as value which we'll be able to create for our shareholders.
All right, let's talk about UPL. It's a stock in focus. It's been one of the top performers on the Nifty 50 index today. After a strong Q4, the street has given it a thumbs up, definitely. Chief Executive Officer Jay Shroff remains optimistic about growth in the current financial year as well, and says that the commodity price hike is a positive. Listen in.
We were able to complete the integration in the year one. Year two was a challenging year because it was supposed to be the first year of calm within UPL, but then we had COVID, and that really challenged all our senses and our capabilities. As you know, UPL operates globally in so many countries, and every country had its own learning experience in COVID and how to handle COVID. And we had all our local teams did an extremely good job of not only understanding, explaining to the government that food services are essential and we need to take care of the agriculture, because a medical crisis like this can become a food crisis. And I think very quickly we got support from all the governments around the world, and we were able to operate under essential services. And this enabled us to really continue to function and operate our business. It was a challenging year with a lot of fluctuating currencies, so we had to be very alert, and our teams had to be very, very alert. And supply chain was also a big challenge. We didn't know how the shipping companies and all the operations would get impacted. Under those circumstances, the business did extremely well. And we are very optimistic about this year too, because commodity prices, the food commodity prices are all-time high. And this impacts our business. We've known this for a long time, that when farmers overinvest in improving yield and quality, because they're getting so much more money for their produce, and every extra kilo they produce, that is incremental profit. So we expect that the year forward also is going to be very, very good for our industry.
The rise in the agri-commodity prices, we spoke to Sharda Cropchem MD and Chairman Ram Prakash V. Bubna, who says that the price inflation would not hurt the margins, and he also expects good growth during the monsoons as well. Listen in to what else he had to say.
As you know, agriculture and agro-commodities are a field which is very strongly supported by the government of each country. So whenever there is any such issues, the government step in and they start funding and financing the farmers and the agriculture field as such. So I think this will not have any adverse impact on the margins or on the growth. Indian market contributes hardly 1 or 2% of our total revenue. So as far as Sharda Cropchem is concerned, the Indian monsoon and all these things will not affect the performance of the company. But I believe the predictions for the weather is good also and the growth will be there also in the Indian markets.
All right, Dr. Reddy is in focus on the back of its earnings, but more so on the back of the Sputnik V introduction. Soft launch took place on Friday, remember. It met expectations in the fourth quarter on the earnings front. Profit and revenues were largely in line. The drug maker reported a 28% year-on-year decline in net consolidated profit, and that was partly on account of the weak US business as well as higher tax cost. North America sales, in fact, fell about 3% on a year-on-year basis. Now, let's listen to what the management of Dr. Reddy's had to say about the Sputnik V launch, about capacities and, well, everything that you need to know. Listen in.
So today, the first patient was rolled out as part of our pilot. We brought the first installments of or the first batch of the vaccines in order primarily to create and to ensure the supply chain of this product, as this product is required Formula A and B. And of course, once we are rolling out patients on Formula A, we must ensure that they have also B. Plus that in that relevant centers, they are able to cater a product that is can work in minus 18 degrees. So all of that is what we are doing now. And that's what we started, and that's what we are going to do also in the next couple of weeks. Bigger quantities hopefully will come from Russia, and so we will be able to serve more people somewhere in June.
Escorts is one counter that is under pressure in today's trading session. Vivek is here to take us through what exactly the management said during the Q4 earnings call, especially on the outlook for the tractor segment. Vivek?
Well, Escorts delivered its fourth quarter results, and the results, while they were in line with what the street was anticipating in terms of the volumes as well as the revenues, what did disappoint the street was the fact that the EBITDA margin, clearly impacted by rising commodity costs and other supply chain issues, came in much below what the street was anticipating. Now, more important to highlight was the fact that what exactly was the company saying in the conference call in terms of the guidance for demand in the tractor segment in Q1 FY22 and also going forward in FY22, how exactly are they expecting demand to revive and what would be the key drivers of demand. So now what the company did, they gave an outlook as far as the tractor market for FY22 in the earnings call. The company said that the macro drivers of tractor demand, that is farmer cash flow, reservoir levels as well as government procurement, these are the things that continue to stay in place and are quite steady at this point of time. Also, when you're talking about monsoon, they're remaining quite favorable and in fact they remain quite positive that the long-term outlook remains intact because of these positive factors. However, what they're saying is that near term, they expect quite a bit of disruption due to the spread of COVID-19 in rural areas as well, and also due to the lockdowns that a lot of localities are being forced to impose. Along with that, the company has tempered its outlook for FY22. They still expect a growth, a high single-digit growth is what they are expecting in FY22. Given the fact that they are seeing quite a bit of inflation, the company has also gone ahead and already raised tractor prices twice. They expect one more round of price hikes to flow through. Along with that, the company did say that yes, commodity prices as well as supply chain is a bit of an issue, and these are things that the company is still working on.
Thank you for outlining what the management actually had to say about their outlook for FY22. And on that note, we are out of time with this edition of Buy Now, Sell Now. It's a goodbye from Alex and myself. Thank you for watching.